What is going on, guys? So welcome to another episode here of the Day Trading with Carter podcast. So if you're new to the podcast, drop a subscribe or do what you do. If you're watching on YouTube, welcome back. Here we're going to be talking about why day traders fail. I made probably a ton of videos explaining this, but I'm going to be talking about it more in depth. So let's jump right in, guys. So with any type of investment or any type of trade, it takes risk. Okay, risk is by far the most important thing you can understand, because if you are a new trader and you're risking all of your money and you're 50-50, so let's say you make a trade and you gain $100. Okay, you have $1,000, you gain $100. Okay, you might be thinking, oh dang, that's 10%, killing it. Well, the next trade you have $1,100. You risk all of that, okay, and you lose, and now you're down to $500. Okay, so now you make another $100. Okay, you're up to $600, and then you have a loser. Now you're down to $350. And so pretty much understanding risk pretty much just comes down to a couple of things. It comes down to share size, because you have to have a good amount, or a pretty much not a good amount, but you have to have enough shares in where you can make money, but not too many where if it turns south you lose everything. So a good way to look at it is pretty much, it's called asymmetrical risk reward. So pretty much what that means is, if that's, say you have 3 trades, okay, and you have good proper risk management, you can be wrong. No, you can be right 33% of the time. So you can be wrong you can be right, 33% of the time, guys. And you can still break even. And that's incredible. So, that's risking $1 to make 3. So you try one time, you don't make any money. You try again, you don't make any money. You try again and you make all that $3 back. So pretty much, balancing risk is pretty much the bread and butter. It's the most important part of any short-term, any long-term investments. So you always have to ask yourself, how much upside and how much downside should be expected? If things go south, what should happen? So, you always have to realize that, guys. So, pretty much, I forgot to tell you guys this, but there are pretty much 3 main ways traders fail. And we're going to be just explaining that. I forgot to bring that up. But, let's see. Let's move on. All right. So, the next thing here is you are uneducated. The biggest thing, guys, is you're uneducated. Read these books. If you're not a investor, or if you're not a trader, read financial books, because you're going to be putting your money in 401ks, IRAs, and you can learn how to maximize your profits. So I'm reading Tony Robbins, Money Master of the Game, right now. It's fantastic. I'm only 100 pages in. Here's a book that I wrote, How to Become an Active Trader. This one is obviously more along the lines of day trading, or any other type of trading here. But pretty much I have maybe 35-40 books all talking about trading or investing. So pretty much you have to realize that it takes time, because you're not going to just put money in the market and you're not going to just instantly make money, guys. It takes time, takes practice. But so pretty much the most important thing you can do as day traders or swing traders is to just learn, because really many traders fail or give up because they don't understand why they're losing their money. And those types of traders may catch some stocks over the long term, but some traders may have some winners, bam, 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 bam. But once we get into a market that they don't understand, they're going to take back all those profits, and the market will always beat you if you pretty much stand flat-footed. But all right, so let's move on. So the last and final way, there's a lot of other ways, guys, but these are pretty much the main three that I either found myself in or So pretty much this is let's move myself here so you guys can see me. Alright, so pretty much what they do, this is probably the second worst thing that you can do other than gambling your money is pretty much to repeat failures. So this includes anything from buying into a downward trend market, unsure of a strategy, pretty much any time that you lose money, you failed. You got beat by the market, guys. You got beat and you lost. Now, you can either learn from it, which 10% of people do, or you can just repeat it, and that's what 90% of people do. So, when I first started trading, I found that this was one of the hardest things to do, is because I always thought I was right. And obviously, if you think that, you're going to lose. So, I had to pretty much just learn from myself. I had to learn from other traders, and I had to create a strategy that worked for me. But so repeating failures, you can't do it, guys. So pretty much what a smarter trader would do is if they take a loss, which every trader does. I'm not saying I'm perfect in any way. You can literally see my trades. I had a $30 loser, another $33 loser, but a $405 winner. Proper risk management. I was red on 2 of the trades, but I was green on 1 of them, and that 1 of them made up for everything and gave me some nice profit. But so I had to learn a strategy that worked for myself. I could not piggyback off other people because I felt like it was too hard. By the time that they called it out, the move already happened, and I was pretty much buying when they were selling. So, but you guys can fail hundreds of different ways, but these are the main 3 that you'll find yourself in. So I hope you guys enjoy this podcast. It's a little shorter one, but we're gonna put this on YouTube. It should be on Spotify, Apple. So if you guys like the audio version, maybe we can get some guests on here. And if any of my members in the group chat want to come on for a podcast, just let me know, and we can do it over Discord. But so that's it though. Remember to always stay happy, stay positive, and I hope you guys have a fantastic rest of the week. Take care, everyone. Peace out.